Well, hi, Maria. It's great to see you, and thank you for being our first guest on See Next podcast. We're pretty excited to start this series and hopefully, talking to people like yourselves who have done so much in the credit union industry to kind of learn from what works, but also maybe what doesn't work. So,
Yeah.
Maria, why don't we start with you introducing yourself and tell us a little bit about you and your background?
Sure. Well, so such a pleasure to see you, Joe, always. And I really thank you for allowing me to be your first guest, your inaugural guest on this podcast. So I'm very excited. A little bit of background about myself. I have been in the credit union industry now 4 years. Prior to this, 30 years in the in the business, in financial services, ranging from big banks. Sorry for those who are very true to the credit union movement. I was one of the defectors. I came from the banking world, J.P. Morgan Chase, worked there for about 12 years, American Express, so card background, had a stint in insurance as well, and worked at MetLife for about 5, 6 years there. And then, had even a stint in big data AI. So that's a fun one that we can dive into that experience, what it's like to work with data scientists.
Mm,
My background being, somebody who had studied a STEMI back in the day, very heavy in sciences, neurobiology, biochemistry was my background. I actually found that I had a lot in common with data scientists. So that
mm,
was actually a fun little stint in my background. But my background very much started the traditional financial services path. Start in product, understand the customer needs, the member needs, build product that people can use, then eventually growing my way into leadership roles and taking on responsibilities for lines of business. When I was at JP Morgan Chase, I worked in their London offices for about 12 years.
your love of the arts. I didn't know this
Yeah.
about you till, a few years after I met you.
So yeah, I was since the age of 3. I have played violin, still do today. Not as much. I think that the CEO lifestyle is not one that's conducive to having spare time, a lot of spare time. But I would say, yeah, the arts. I have been in the arts since I was itty bitty. Scary when I think about it, but it's like 40 some odd years of playing violin. I actually even was this close to studying performance, and
Wow, that's great. I know I find that fascinating. It's perfect segue to, you've got this big bank background, and then you came to the credit union. Tell me, kind of compare and contrast,
Mhm.
what you saw and then how you adapted.
So I think, big banks, there's some pros and cons to both sides. I think both sides of the house, right? The big banks, it's a good place to kind of cut your teeth. You get a lot of discipline. You get to learn governance. You learn risk management. It's very disciplined and well established, right? You have different parts of the organization all do different things, and you have your box, right? You fit in your box, you do your job, you move to the next box, you do your
Mm,
job. Whereas for me, credit unions feel a lot more multiple hats, right? You come in and you may not know how to do risk management, but you might have been in the branches and started there, and then now you work your way into risk, then you work your way into fraud, then you go over and you go into the lending team. So I
hmm
think the adaptability, the flexibility that people have to have in the credit union space, I think is phenomenal.
hmm
Gets you kind of rolling your sleeves up and learning different disciplines very quickly. I think like I said, probably in the big bank space, there are advantages when you work in a well-oiled machine that has very well-established practices that have been up and running for a long time. You could really understand how to go deep and
hmm
understand credit risk, for example, or how to learn from some of your peers on what they're doing. And there's very much that kind of team mindset
hmm
in the big banks. And I think that's similar in the credit union space. Times I've noticed in some places I've been, it could be that there's a little bit of silos in the credit union space, which is one of those areas I think we all work hard to kill those silos to make sure that people feel that they can jump from one role to the next, but also that they can collaborate with their peers. I think
Yeah.
that's important.
Yeah, no, that's a great point. I want to share my perspective and get your thoughts. One of the things I realized when I joined the credit union, because from USAA, I spent 15
Hmm.
years there, is we have to do all the things that the big banks do. Credit unions have
Hmm.
to do all the things that the big banks do, and I'm thinking here from a technology perspective, right? But with a fraction of the investment and the resources. So tell me about. I mean, do you agree with that? And if you
Mm,
do, like, kind of how do you how
totally.
how do you navigate through that?
Yeah, I mean, this is why I think when you come to some credit unions, you tend to find, people who are trained in technology, but may not be hardcore technologists, right? They may be generalists who came from here, were taught a process, do that process. But sometimes I feel in credit unions, it's harder for us to think outside the box because all we know is the box that we were jumping into, but
Mm,
we never necessarily saw it done in multiple ways in different places. And so that is a challenge that sometimes I feel that, for those who have come from the outside and we've seen it done different ways, we've seen depth in skill, how do we bring that to credit
mm,
unions? How do we bring without having to bring all the people from another side? I think by just upskilling and teaching our people to ask the questions and ask why. Channel the 5-year-old in us. Why?
mm,
Why
mm.
do we do it that way? Is there another way to do it? Let me go find out. Right? I don't know, but who can I talk to? Let me go talk to peers in the industry. I think building those relationships with peers across the industry and challenging the why we do things the way we do it, I think that's an opportunity in the credit union space for us to really encourage that kind of behavior with our teams, to really ask them to be curious and to explore other ways of enhancing and improving the way we do things. Because
Yeah,
sometimes it's not just the way we were taught, right? But it's why do we do it that way? And
yeah,
I think that's critical.
yeah. Back to your point about the box. The box. The credit unions they buy a lot of solutions, right? And so it's kind of a
Hmm.
black box, and that really makes it harder to even if you are curious, right?
Hmm.
You're like you can't break open the box, right? Because
Yeah.
it's what the vendor gives you. And that's one of the things I saw when I came was, a lot of times credit unions are too small to build, but they're too big to buy.
Yeah.
And so there's this how do I get the best of both worlds to one give me the capability to open the box and innovate and be
Hmm.
curious and do things differently, but also at price points that we can afford. and
Hmm.
and so that I see a lot of struggle with that. The other thing I wanted to get your perspective on is because they do buy these black box
Hmm.
solutions, a lot of times we have a very complex
Hmm.
technology stack, and I think
Yes.
we call it spaghetti. Do you see that, and kind of
Oh,
why do you
yeah.
think we how do you think we
I
got there?
call it Frankenstein. I feel like
There you go.
what we do is we take our core systems, like plug and play. Everything plugs into the core. Like we have an integration. Don't worry. Every vendor comes to you and says, "I have an integration. Don't worry. It goes to Meridian Link. It goes to Scimitar. It goes to Fiserv. Whatever you have, we built it already." And I think this concept of as leaders, we need to step back a little bit and say, are we trying to solve 100% of everything that's wrong with the perfect vendor to do everything the way we need it at 100% level? Or I know we've talked about this in the past, but how do we get the 80/20? If you've got a vendor, an ecosystem that you could work and operate in, that makes it a more cohesive environment, fewer integrations, fewer vulnerabilities, right? That you're exposing
Hmm.
your organization to. There are ways that I think we need to balance and optimize the number of vendor relationships we have and plugging and playing into the Frankenstein
Yeah.
versus the let's find an ecosystem that works for us, an ecosystem that allows us this interoperability, that allows us flexibility, that we can code and do enhancements on our side. Because
Hmm.
to your point, not every credit union is going to go create a QSO.
Hmm.
Not every, yeah, and nor should we, in some cases, create some QSOs if we don't have the skill and expertise. But
Hmm.
if we're using technology that is adaptable, that's flexible, that's modifiable by our teams, and it's a matter of skilling them up and teaching them how to use the systems that we have, I think that's an important step we need to take. And I'm with you. I struggle with that here, even at Farmers Insurance Federal Credit Union. I joined here about a year ago. And what I notice is we have a lot of vendors. We use a lot of vendors for different things. It's very fragmented. The tech stack looks a little bit hideous, right? And you said like, what? How did we get here? Well, it's because this vendor sold us on this, and this vendor sold us here, and everything pieces together in a not very nice way.
Yeah, yeah. But you said something. I just wanted to pick up on it because I think it's really, really, really important. Is this 80/20 concept? Like, how do you get
Mm.
80% of the value for 20% of the time and the cost? And 80/20, I've seen it a lot in my experience. You can get you look at the
Yeah.
top 20% of the problems, and that's where 80% of the value is, right? But
Mm-hmm.
we tend to go for perfection. We tend to go for the 100% solution, and the only thing
Mm-hmm.
that's guaranteed with 100% solution is 100% cost, right?
Yeah.
That's pretty much what you get.
So,
And you've got a great opportunity being a CEO. And I was
mm-hmm.
very fortunate. I worked for a great CEO and I had some
Go
great
James.
peers. Go James. And we had some, but I had some great peers too. And they worked with us in technology around that 80/20 principle.
Mm.
One of my colleagues, the EVP over consumer banking and marketing too, he said, perfection is the enemy of good.
Yeah.
And I love that phrase. And we managed to do a lot, but it doesn't matter what technology you pick. It's really a mindset paradigm shift that you need. So, Beck, you've had a strategy role, you have now a
Mm-hmm.
CEO role. Tell me about how you think about strategy and execution, given some of
Mm-hmm.
the challenges that we just talked about. How do you succeed at
Yeah.
Farmers Insurance Group Credit Union?
Well, give me time. Still here, like just a year in. But we'll see how far we get. I'm excited. I think actually we strategy is critical to where we need to go in any company, in any credit union. I think if you don't have a clear vision of who you want to be, where you want to be in that 3 to 5 year time frame, it's really hard to organize people behind that vision. What is the vision, right? If we don't have a clear vision, where are they going? Are we just like growth for the sake of growth, but what's the rationale? What's driving it? So I'm a strong believer in strategy. I believe strategy first, have a clear vision, know where you want to go. And I think a big part of it nowadays has to be around the technology roadmap as well. I think any leader, any CEO who kids himself thinking that I can just formulate a perfect strategy and not have at least one or two slides of your strategic plan talk about technology, that to me tells me that you're not thinking about where the world is moving, right? And we all have to be thinking technology is becoming such a critical play, and it always has been. We know digital is important, but now we start talking generative AI. We
Hmm.
talk about how are we going to operate in an environment that's progressively year on year getting more sophisticated, and we
Hmm.
have people who are not necessarily in our teams keeping up with that technology and that evolution.
Yeah.
So really having a clear picture of strategy. Where is it we want to be? Who do we want to be? What is our vision? And then once we have that, it's then getting down into how, if we say this is our vision, how are we going to measure we got there? Right? Because
Yeah.
if you have a
But
really
before
clear picture on the end state, you can get there,
No,
breaking it
no,
down.
but no, I'm sorry to interrupt because I do want to carry on from that point where you just discussed about how we
Hmm.
get there. But you said something very, very powerful that I wanted to just kind of foot stomp. Now, for the first two-thirds of my career, I was always trying to create a technology strategy that matched the business strategy, right? And what I realized is there's only one strategy. There's only
Yeah,
that's the business strategy. And to
that's
your
right.
point, you don't need a separate technology strategy. You need
Mm-mm.
technology capabilities and roadmaps built into the business strategy. It may sound like a simple thing to think, but and a nuanced thing, but to me it was so powerful because
Yeah,
when I changed my mindset that says no, it's not a technology strategy, it's how do I fit into the business strategy, things changed
yeah,
significantly. And I'm glad you said that because I think that's an important point for our listeners,
yeah.
hopefully other CEOs, CIOs, other credit union leaders. But sorry, I interrupted, but go back now to your
No,
point. Now
actually,
you have vision.
now, yeah, but I think what you're saying is absolutely true. Like there has to be that technology is that component of that plan. It is not an afterthought of the plan, right? It's got to be, well, if I'm going to scale and grow, my systems have to be able to scale and grow, and the performance of those systems has to keep pace with the scale. Now, if you're not, if your choice is to stay flat and not grow, and it's purely about, member service, well, then there's a component of technology there too, anyway, right? Like, no
Hmm.
matter what you do, there is going to be an element of technology in everything we do from a strategic planning perspective. And then when you look at that, the high level vision of where you want to go, you have a clear vision of where you want to go. You have KPIs that you can identify and say, you know what, how am I going to measure I got there? Like if I fast forward 5 years from now, and if I say I want to be 5 billion in 5 years, how do I know I hit that? Well, first I got to start with the understanding of what's stopping me today from getting to 5 billion in 5 years. And if what's stopping me is that, well, I have the wrong, in my case, I could tell you it's that, we need better focus on member growth and experience. We've done a lot of sort of square peg in the round hole. You have business members, let's give them a consumer product and underwrite them as a consumer. That doesn't work. It's not scalable. It's not member centric. So, we said member growth and experience has to be one of our strategic imperatives. We've got
Hmm.
to focus on that if we're going to get to where we want to go and become, like our vision says, the most loved financial partner. That's important for us to focus on that imperative. The second one for us is focusing on, for example, business banking and creating a platform and an ecosystem that is relevant for businesses. And then the third one for us was performance excellence, because we said, if you're trying to you want to become the most loved financial partner, it's going to be because you built trust and respect with your membership. But it's hard to build trust and respect if you're tripping on things constantly, right? Like,
Hmm.
whoops, that's a foundational thing. We missed that. Or this doesn't work right. That doesn't work. This vendor is not working properly. And so, we look at those three imperatives and we say every strategy we put together, and we outline a strategy and say, we want to do this, this to grow or to enhance our member experience. It's got to link back to one of those three imperatives. Because if it
Yeah.
doesn't, we ask ourselves, why are we doing it?
Yeah, you said it. You made a great point at the end there. We all want relationships with our member, but we don't realize you have to earn that trust first,
Mm,
right? And so the trust and relationship go hand in hand. But you said earlier in our conversation, and now generative AI and agentic AI ups the ante. It kind of ups the
oh, yeah.
ante. One thing, and I wanted to get your perspective on this. One thing I worry about is if we think of agentic AI as another channel, just like we thought of mobile banking was
Mm,
another channel, online banking became another channel, call center was another channel,
mhm,
everything was additive, right? Nothing went away. They were all new, every channel came and no channel went away. If you think of agentic AI as another channel,
mm.
as opposed to how do you transform your business, and you may have to change some of your channels, but how do you think that's a danger, or do you see us navigating around that?
Yeah, I mean, I think it's not a danger. Maybe I'm an eternal optimist, but I believe that you've got to use the tools you have around you to accelerate and to take advantage of the efficiencies that you can gain. I don't think the days are gone where we would say throw people at it. Oh my
Mm,
God, look at this volume I'm seeing on the call center side. Let's hire four more people. I don't think that's the future, right? The future is going to be agentic, right?
mm,
AI. It's really thinking, well, how, again, things like virtual agents and chatbots, being able to take off the transactional work, the very basic level of servicing. Call that your tier one. Put
hmm.
your tier one with the technology and the optimization that you can drive there. Leave the humans to do the harder level work, or more of the relationship focus, the cross sell, the upsell, the listening to the member when they're going through, the death of a loved one. Those are the kinds of things that you want to make sure your human call center reps are really engaging in that.
Yeah,
No, you don't probably need over time, you don't need to have a massive team, but you do need the right people, and you need to shift their behavior and get them to embrace, that technology, because that technology makes them more efficient.
yeah, I 100% agree with you. If we just think of keep the channels the way they are and add this as a new channel, as opposed to
Yeah.
no, the call center needs to become more relationship based,
Yeah.
more on the tougher problem sets, and
Hmm.
let agentic respond or even predict,
Yeah.
right? the simple transactional needs and just handle
Right.
that. I think that would be great. Maybe I'm not as optimistic as you because from the
You've
technology
watched
side,
Terminator too much. I think you need to
yeah,
back off
maybe.
a little.
But I just look at the cost of keeping each one of these channels, right? And I'm keeping the call running, and then I'm keeping the call center
Yeah.
running, and I'm keeping the teller systems running. Maybe I'm being a little selfish here, but
Hmm.
back to the point we were making earlier, the big banks have so much money to spend, right,
Yeah.
versus the credit unions. But now we're expected to deliver all the things JP Morgan Chase is going to be delivering with
Yeah.
Agentic, right? So that's kind of where I hesitate.
I'm with you though, and I think you're right. So that it almost begs the question then around the age-old debate about scale and size. How important is that? Because we say, no, 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 we need to stay small so we could stay close to our membership. That's great, but to your point, that cost of that technology is expanding, right? The
Yeah.
cost of fraud prevention is expanding. Like the rules of the game are changing a little bit when it comes to those costs. And then if we're not able to really attract, retain the best technology, the best people to be able to support that work and that
Hmm.
technology, then it does leave us behind. And then, yeah, the big banks have those opportunities. They spend a couple of $1 billion a year on technology and they can afford to bring in the best of the best.
Hmm.
That's where I lose sleep at night sometimes because I say, to keep pace and to be able to scale and grow means that we need to take it seriously. It's not like being small and shrinking is not where we need to be, right? We need to
Yeah.
be thinking about the scaling, the growing, and the collaboration to get us there.
Yeah. And I think what you said earlier, one, if you think about the 80/20 rule, I think that helps
Mm-hmm.
you scale. I think if you think about an ecosystem approach versus a
Mm-hmm.
point solution approach, helps you scale and grow. And I think if you use agentic the right way, you can build trust and
Yeah.
relationship as you scale because you take that work away from the humans. So
Mm-hmm.
so well, maybe now you just made me optimistic now from where I was.
Yes. Mission accomplished.
I just think
Yeah.
agentic in the right hands
Mm-hmm.
can actually give credit unions maybe level that playing field, right? Where it was tough to do because of the spend. Well, listen, Maria,
Mm-hmm.
I've taken plenty of your time today. I've really enjoyed talking to you, and I thank you for being our first guest. And we'll
Thank
have to
you.
listen. Well, next time we'll have you on playing the violin. How about
Ah,
that?
well, that'll cost you. I charge a lot for that. I'm just kidding.
I'm sure. I'm sure you
My
do.
pleasure. I'll consider it a charitable benefit, so we'll raise money for something. But yeah, that's a good
All right,
idea.
that's a great idea. That's a great idea. Well, you take care,
Sounds
and
good.
thank you again. I forgot to mention to Maria that our pets like classical music too. Our cats like Haydn, and our dogs like Bach.